I want to bring in Kevin Green right away, senior markets correspondent here on Schwab Network, to set up the action for today. All right, we just finished out a month different than how really the month began for April. It was incredibly volatile, especially in the early part of the month. We were briefly in bear market territory. Just how would you characterize how we finished things and kind of where we are today?
I mean, obviously, we finished off really strong. You know, the S&P 500 did not in the month positive, but if you're looking at the Nasdaq 100 or the Index, it got pretty close to in fact actually turning positive for the month here. And obviously, we have a lot of this enthusiasm when it comes to these earnings announcements here. And as you said, technically we did actually go down to that 20% level for the S&P 500, but we were able to recover here. I think the risk that the market has seen when it comes to tariffs has probably been priced in for the most part here. And then the earnings side of the equation here is actually looking pretty decent when you're looking at the Mag 7 companies. And so we've seen this type of reaction before, actually back in around October to November of 2022, 2020, early 2023. The technology stocks were able to kind of lead the way here, even though we may have seen some weak economic data that impact companies that were in the consumer staples and consumer discretionary sector here. So what you need to have as far as this market to continue to move higher is the bigger companies, the market cap weighted companies that really do have an impact on the S&P 500 continuing to move higher here. And it's going to be very hard for the bears to try to knock this down for now. The economic data that we had yesterday, Diane, I would say for the most part was neutral to bearish, and we did see the initial reaction. But once again, there's a lot of buy the dip mentality here, and market is more enthusiastic, it seems like right now, when it comes to artificial intelligence and tech, more than probably focusing on the economic landscape at the moment.
It surprised me that you saw, ultimately when we got towards the close, just shaking off that economic data, shaking off the news that the economy contracted in the first quarter, and then that weaker ADP report. I know it's not the NFP print, but it does show some, deterioration in the economic landscape. When you think about, obviously, besides earnings, tariffs has been top of mind recently. We're seeing that Treasury Secretary Scott Bessent doing an interview with Fox Business this morning, saying talks on the table with Japan next. Does the attention, is it all about big tech now? And we're going to get into the numbers on Microsoft and Meta, or is this, tariff, getting a deal on the table matter more?
Yeah, that's actually a really good question. So a couple of points just to kind of focus on. One, yesterday was also month end. We have to be mindful of that, Diane. If you kind of go back and look at the charts since October of last year, pretty much every single month end has had a wild ride to the upside. We see a flush to start off, and then you do see the tape being, printed higher. And so we have to be mindful of that with some of that price action that you were kind of mentioning yesterday. I think some of it was probably more mechanical than it was new speculators kind of getting into the market, portfolios rebalancing here. From a tariff standpoint here, we have to also just be mindful. Anytime that we have any type of shock to the market and we have an event like tariffs, Ukraine-Russia conflict, what have you, over time the market starts to price that in, and it starts to kind of look, I don't want to say look past it, but they know that there is a little bit of an issue there. The thing for the market right now is that they are looking for the news flow, the positive news flow, and hopefully everything incrementally gets better over time as far as these talks. I think it's unrealistic for us to say that we will see a concrete trade deal that's passed by Congress by, in the next 6 months or so, but you'll probably start hearing a lot more announcements when it comes to frameworks that are going to be out there, non-binding trade agreements. That's what we saw in the first Trump administration. As we see more of that conversation taking place, I think that's going to be incrementally better for the market until we see a really dramatic drop when it comes to the economic data. Now, I also kind of want to point out, when you're looking at GDP yesterday, yes, it came in negative. There's a wide range of estimates that were out there. And you are seeing some people that are nitpicking as to why that actually occurred. Net imports, when you're kind of looking at it, had a massive drawdown when it came to the GDP number. And when you're looking at inventories, and if you calculate the numbers, you say, hey, there's a portion that is missing. And the portion that's missing is intermediate goods, which are not actually calculated in GDP because you would have this double count type of situation going in, meaning that we had companies that were bringing in raw materials to produce products, but until those products are actually final goods, they're not going to reflect. So you're going to see a massive readjustment this quarter coming up, the Q2 numbers. You're going to see a massive readjustment where imports are going to probably fall off a cliff, and you're going to see inventories really stack up and rise. And so you're going to see probably more of a positive print for Q2 right now, if consumption continues to hold up. And that's why probably the market also said, okay, knowing those factors, maybe that number that we saw yesterday was not as bad as we may have feared.
And then let me ask you this, crude oil below $57 a barrel, under pressure. What does that tell us about the economic picture?
Yeah, the crude oil is telling you that we are having an economic slowdown. You can make the case that, yes, we are seeing some new production being put online by OPEC Plus. There was a report that Saudi Arabia stated that they are okay with lower energy prices. But at the end of the day, the production that OPEC's bringing back online is not enough to really push these prices lower as aggressively as we are seeing. It's not that monumental of an impact. So you're seeing a lot of bearish takes on crude oil. It is pricing in a slowdown. And the trajectory that we are seeing right now, you can make the case that we could break that $50 level, maybe hit $45, $47 until maybe some buyers start to step in. But that's just the case that's going to be taking place. On the back end of that, you're seeing natural gas actually rise because of those crude oil prices moving to the downside. So we will see prices at the pump starting to go down a little bit. You're not seeing the direct relationship between gasoline prices moving lower and futures and what we're seeing at the pump, but you are seeing a little bit of that taking place. But what will also happen, Diane, is utility prices throughout the summer most likely will actually rise at a pretty healthy clip because the constraint of natural gas, which is a byproduct of shale production, is also going to draw down on supply, which is once again going to push prices higher.
Okay, so let's talk about some of the bullish sentiment. Let's talk about what we're seeing from Microsoft first. Shares rallying right now. Recap the numbers for us, KG.
Yeah, we are seeing a nice little pop for Microsoft here, up over 9% to start the session off. When you're looking at the numbers that they reported here, they actually beat both, obviously, on the top and bottom line here. Adjusted earnings per share came in at $3.46. Street was looking for $3.20. Revenue also exceeded the Street's expectations pretty much by about $1.5 billion here, coming in at $70.07 billion. Street was looking for around $68.3 billion here. Revenue growth was around 13% on a year-over-year basis. And when you're looking at the key areas of their business, for Azure revenue growth, we saw that hitting at around 33% on a year-over-year basis. Street was looking for around 30%. Intelligent Cloud also exceeded the Street's expectations here. And also when you're kind of looking at their, the Windows unit and Xbox and things of that nature, which has been a little bit lackluster, that also beat the Street's expectations here. Guidance, they are looking for next quarter revenue to come in between $73.15 billion and $74.25 billion. Street was looking for $72.26 billion. So they beat by about $1 billion on the top line revenue guide for next quarter. And revenue or Azure growth, they're looking at around 34 to 35%. So they're actually seeing more of an acceleration when it comes to Azure. CapEx spend, you did see a slight increase when it came to CapEx spend. We got to be mindful, too, a lot of the commentary on these conference calls. Yes, some of this is going to be organic growth for AI and data centers, but the majority of these increases are trying to reflect the increase in cost for building out these data centers, these GPUs, because of tariff policy. So there's a bright spot there, but it's a little bit more watered down when you're looking at the CapEx spend expansion, not only from Microsoft, but also when you're looking at Meta.
All right. Well, it looks like in terms of the price action, all the bright spots are being paid attention to in the sell side, boosting price targets left and right. Cantor Fitzgerald boosting it to 512. Morgan Stanley raising their price target to 482. A couple more upping their price targets here on Microsoft. Let's take a look at Meta. Meta shares rising as well in the pre-market. KG, recap some of those numbers too.
Yeah, we're seeing Meta up around 6%. Once again, a beat both on the top and bottom line. Revenue came in at $42.31 billion. Street was looking for $41.22 billion. And the adjusted earnings per share came in at $6.43. She was looking for $5.22. Ad revenue also, once again, beat the street's expectations. Once again, almost by about $1 billion here to the upside there. And their guidance was, for the most part, on the top line in line with expectations. They're looking for Q2 revenue to come in between $42.5 billion and $45.5 billion. She was looking for around $43.8 billion. And once again, the CapEx spend moves to the upside here for 2025 CapEx spend. Now they're looking between $64 billion and $72 billion. That's the range. That's up from $60 billion to $65 billion. Due to infrastructure needs, but also, once again, accounting for some of the price increases in order to build out those data centers. And daily active people actually did increase by 6% on a year-over-year basis, exceeded the street's expectations. So Meta on the top and bottom line did a phenomenal job. They're probably the biggest company and probably the first company that actually has integrated artificial intelligence within their front-end platform when you're talking about the user experience by leveraging it within Reels. And they're actually seeing a really healthy return on that, and they're also able to actually raise prices because of those offerings. And so they're trying to actually expand those margins. They continue to gain market share here, and the market appreciates the fact that they're spending the money in the right areas. Last thing I will note when it comes to Meta, the Asia Pacific ad revenue did exceed the street's expectations, but they did make a mention that they might see a little bit of a slowdown because of these tariffs that are taking place, and as well as the shipping of smaller goods could also impact companies like a Shein or Temu, which obviously does a fair amount of ad spend for Meta. They did call that out, but once again, Street really does like the report here. Mark Zuckerberg does sound like he's actually making some very bullish comments when it comes to artificial intelligence and really doubling down and not really signifying the fact that they're slowing at any rate right now.
I noticed that. All right. And KG, before we let you go, your levels that you're looking for to the upside and the downside on the S&P 500.
Yeah, to the upside, I'm looking for 5,700 to the upside. To the downside, looking at around 5,400 for an area of support here. We are testing some really key areas of resistance, but having the fact that we have earnings obviously exceeding the street's expectations, we will have more earnings tonight. Let's see how the market actually does resolve these key resistance levels, especially for the NASDAQ 100. And I will say, Diane, before I go, NASDAQ 100 monthly chart looks actually very bullish. Nice little green hammer candle here. So a lot of technicians will actually look at that and may decide to try to look at tech a little bit more than maybe the NASDAQ or the S&P 500 or even the Russell for outperformance here, some alpha.
Okay, and next up we got Apple and Amazon coming from the Mag 7. Thank you. That's Kevin Green, Senior Markets Correspondent here on Schwab Network. Thanks, KG.